Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Well, it's been a while since our last video. We've actually had 6 trades to catch up on. So we're picking up here in the very beginning of August. As a reminder, some of these marks are a day delayed. So we actually took the first trade in August right at the end of this day. So we went into the market, it fell down the next day, popped back up, and we actually decided to get out because who knows whether the market's going to go up or down. It's a tough call. So we exited there. The market dropped a little bit, which is a perfect setup. We like to go in when the market's, when we went in at a lower price than we exited. And then the market did kind of this interesting hump right here. It looked great through here and then fell off. And we decided to take an exit. We weren't sure if the market was going to keep going up or if it was going to start heading down. So we took our exit. The next day, the market dropped a little bit. We always like that. So we're entering it at a lower price. The next day, the market takes off. That's looking great for us. And it's following this again, this sort of a hump sort of a thing. And even though this ending was a green candle, it still looked like it was falling over. So we decided to get off. At this point, it almost looks like we're just following this crowd. This crowd happens to be at the Charlotte airport at a 5K. It looks like we're just kind of rolling along with these different trades. So, back to our charts, we missed out on a little bit of an up run here, but we went in at the end of the day here. Some people might look at this as, a possible breakout from some consolidation. As you know, Adam has his own sort of thinking about things, but we went in here, again, the same kind of a hump here. And on this day right here, we decided to go ahead and exit. Again, we can't tell if this is sort of an end of a trend or if it's, buy the dip. It's kind of tough to call it, but we took an exit here. The market jumps up and we are right back in. So this trade's looking like, very similar up to here. It's starting to level off. But wow, look at this red candle. This is a huge drop down. It almost looks like this cliff at South Mountain State Park over by Charlotte. It was a really interesting day. The market just collapsed. We did not exit on that day. We actually waited till the following day and took our exit here. That was a lucky play because we did get some bounce. This is always a tricky exit because you never know if it's going to keep going down. That was such a bad day. I mean, the next day could have just as likely been another drop. But Adam makes his decisions based on whatever he's feeling that particular day. We took our exit there, got some of our losses back. So that worked out okay. Following day, we're back in. And again, we're doing the same buying lower and selling higher. This actually went on. We exited the following day. Same sort of thing happened. The next day, the market drops. We're back in. Market goes up. We're out. So we're actually timing these pretty well. So this is bringing us right to the current time. That catches us up on our 6 trades. We have an open trade in here. Again, we missed that market jump, but we went in right at this level. We'll talk about that last trade on the next time. But we are going to head over to our tracking sheet and see how we're doing. Well, here's our tracking sheet. We've got 6 trades to catch up on. The last one we reported on was 8-6. So the first trade for our series here closed on August 20th. The S&P was at 638. It picked up 0.92% from its prior position. We picked up 1.43 and we are now tracking at 31%. We're hitting a really nice number here with our beat the market factor of over 3. Again, our target's 1.5, doing pretty well here. The next trade closes on 9/2. The S&P is at 640. It picks up 0.37%. We're picking up 1.04. Now, as you probably saw on some of the charts, we are picking up more than the market because we are trading the leveraged version of the S&P. So we're trading the product called SSO. So we are outperforming here on some of these trades. The downside of leverage is when you are losing, you lose twice as much as the market. So be very careful. I think leverage is one of the ways that can ruin you. Next trade, 925, market's at 658. The market goes up 3%. This one, as you might have remembered, was one where the market jumped up. We're getting in a little bit late. So we don't even get the 3%. We pick up 2.78%, bringing our year to date to 36. A couple more trades here to go. 928 picks up 0.97. We actually lost some. This is the one trade with the big red candle that we got out on the next day. This was, we were in there for a long time, had a huge gain running up, but the market just completely rolled over. And these next two trades were the little bit where we were scalping, and you can see definitely on the performance side, 11.15, the market changed 0.26 from the prior position. We pick up 0.8%. Again, these are 1 or 2 day trades. They're not really big, big in terms of gains, but we're just eking out a little bit at a time, which always helps. So the last trade in our series closed on 10/17. The market was at 664.39. The market actually fell. It was lower at the end of the trade than at the beginning. So it brings its year-to-date total to 14.32%. We pick up 1% on that trade. Again, Adam and I really like this sort of positioning where the market goes up, we're selling off, the market drops, we buy back in, market goes up. We definitely, you can see some big gains on these compared to what the market does. But that brings our year-to-date return to 38.81%. Pretty strong. Again, this is sort of interesting. Our beat the market factor is sitting at 2.71 with 38% gain. This is the proportion of how are we comparing ourselves to the market. If we were doing the market, that beat the market factor would be 1. If we were twice the market, we'd be at about 28%, but we're actually getting close to 3 times the market. So, really good, strong metrics. Let's take a look at those sort of in other things we watch. Percent winning trades, we expect to be around 70. We're sitting now at 66. We want to be in the ballpark of 70, and we are. That's working out okay. The last key metric that we added in a couple sessions ago was compounded annual growth rate. This is over 5 years. If you were holding the S&P 500, your compounded annual growth rate would be 14.4. If you were trading with Adam and I, your compounded growth rate would be 24.24. Every couple of percent in compounded annual growth rate over a period of time can make a huge difference. 1 year it obviously you make twice as much in 1 year, but that compounding effect happens every year, even for a couple percent. So these are really key indicators that I watch. As you know, my game is, can I beat a buy and hold in the S&P 500? Can I do it with even less risk? And that's what we're trying to achieve here. So far, mid-October, we're doing pretty good. If we look at our year-to-date, I'll look at the 5-year chart here. Our year-to-date is 38.81%, strong results. The market's at 14, not a bad year for the market either. These are always pretty good. But right now, as long as we're beating market on compound annual growth rate, we're going to continue to trade. And that takes us to the end of our catch-up. And as you saw, we were in an open position. We will pick up on that trade on our next video. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only. It should not be taken or interpreted as advice. Until next time.